If you've done any amount of research as a trader, you see all sorts of talk about indicators this, indicators that, but in this video we're going to talk about the most important indicator. Hey, it's Clay Trader at claytrader.com. In this video, I want to talk about a very, very important concept, probably the most important concept out there and the most important thing that you as a trader want to focus on and be very aware of. And that has to do with indicators for success. How can you really measure whether or not you're going to be successful as a trader? How can you look at what you're doing right now and then have that be a projection into whether or not you're going to survive in the long term? So that's what I want to focus on in this video. And like I said, it really is the central thing and key thing for survival as a trader. So we're talking long term, as I said. And the question is, how can you be successful? So how can you be successful? And we'll put in there will. So will you be successful? Can you be successful? You know, that's the question. I want to be in this for the long term. You know, how can I do it? And, you know, while we're not going to, that's a little bit more intricate, there is something that's going to, like I said, be very black and white to you in terms of whether or not you're going to have any sort of long run survival and success in the market. So let's think about, you know, what are some of these things that are going to help you be successful? What are some of the things that you can help as or use as indicators in terms of long-term potential? So the first one is, what about the amount of money per trade? Is that going to be what is going to make you successful in the long run if you're looking at it and using things as a leading indicator? No. Amount of money per trade, who cares? Doesn't matter at all. Second, maybe you're thinking, well, it's got to go down to how often do you win or lose? You know, that is, you know, I can see where people would think that. Yeah, you know, you got to have high success rates. You know, you got to win a lot, or if you're losing too much, you know, that's too. But no, that does not matter. Maybe you're thinking, well, it's all dependent on how much money is in your account. So how much money do you use? You know, it's all about the capital. The only way to have really long-term success, be able to tell if I'm actually having success, is if my account's going up and all that. Nope, doesn't matter. Does not matter at all. What about this one? Are you a good loser? A good loser? What do I mean by that? Well, this is the key. This is the best indicator. This is the only indicator. This is going to be what tells you what sort of path you're on. Are you on the path to longevity in the market, or are you on the path to blowing up your account and either needing to just walk away or pull more money out of some other bank account and putting it into your trading account? Are you a good loser? What do I mean by good loser? Well, we're going to take a look at some screenshots here in a little bit because it's kind of hard to define with words, but I think by just showing it, it makes it a little bit easier. But the key thing here is that superhero, not good. What do I mean by that? Well, if you take a loss and then all of a sudden you look at that loss and you're thinking, all right, I have to become a superhero now to make up for that loss that I just had, huge, huge red flag. You do not want to be putting yourself in a situation where you got to, you know, put on your I don't know, Spider-Man costume or Superman cape or your Wolverine claws, and you got to say, all right, now it's time for me to really trade, be perfection, be a superhero, because I got to get that loss back. If your mind is working like that and you're finding yourself in those situations, huge, huge red flag. That's not how losses should be taken, and you are not a good loser. And in, again, the long term, you're not going to survive. You know, I get it a lot from members, from students. They send me screenshots of their gains, and I love it. I love to see people making money. But the thing I like more, and the thing that I absolutely love to see, even more than the gains, are when people show me their losses. Because their losses are what tells me whether or not they're going to have any true sort of potential. So let's take a look at a couple of screenshots from members that have submitted more of their overall, portfolio, whether that be from a day or from a couple of days. So as I mentioned, I've had over the past few weeks just some members mail me in their things. These are all actually options trading. So members that trade options have been sending me this, but that's besides the point. I want to focus on these screenshots and what they're showing. So here's a trader right here, and they sent me this from the in the middle of the day, because you'll see they still had some positions open. But let's just go down the list. So they traded Apple, and you'll notice took a $78 loss. They traded Amazon, okay, took a $7 win, but probably after commissions, another loss. Then they had the trade on GILD, $120 win. So are you noticing anything right now? Okay, $78 loss, but then a $120 win. The next one right there, Google, $739 win. And if you see, there's still some positions out there, so that could have ended up more than what it was even at this point. Then let's go down to the next one, GoPro, $60 loss. So notice they've lost 3 times already. I'm counting that $7 one as a loss because after commissions, that would be a loss. So 3 losses so far, and they've only had 2 wins. Again, 3 losses so far and only 2 wins, but $120 win, $739 win. Next one, Netflix, $24 win. With options, with commissions, especially on the options, probably right around break even, maybe a small little winner, but let's just call that break even. Tesla, so far, because the position is still open, $30 loss. So let's go through that again. Apple, loss. Amazon, loss. GoPro, loss. Netflix, break even. Tesla, loss. But then look down at the bottom. Notice what their profit and loss is for the day. $722 profit. Why is that the case? Because this person is a good loser. This person, they communicate regularly with me. They've worked hard. They've invested into their education. Mr. B is what he goes by. But Mr. B is a very good loser. And like in life, your parents maybe told you, you got to be a good sport. You got to be a good loser. Lots of times in the market, that gets kind of flipped around. You can't be a good loser. You got to win. You got to win. That's what this trading's all about. You got to press forward. Losing is for losers. No, in stock trading, options trading, any sort of trading, you need to be a good loser. And here's an example of a very, very good loser. Like I said, they really only had 2 winning trades, but with all their losses, because they're a good loser, they never needed to go into superhero mode. They kept their losses very small and then had a couple ones that really worked out, and the rest is history. So for this one, I wanted to annotate this just so you could see it a little bit better. But this is from one day for a trader. And we'll start down at the bottom. And all they were doing was were trading Apple options all day long. So on their first Apple options, 38% gain. Very nice. Next Apple option, 20% gain. Very nice. Next trade for the day, 11% gain on Apple. Very nice. 20% gain. And then look at that, and this is my favorite part of this entire screenshot. Again, do I love to see people making money? Absolutely. Do I love to see that they actually had, out of these 5 trades, they're at an 80% win rate? Awesome, but I don't care about win rates. I love that top part. 9.4% loss. It ended up being they bought at 107 and then just cut the losses right there at 97 for a simple 10-cent loss, which equated to that 9.4% loss. But you see, which one is not like the others? Besides the loss and gains, but look at how small that number is. And the small number actually pertains to the loss. Now, if you had a bunch of wins, and what happens if you add, another 0 behind that, which could very well be possible in options if you're not very careful, that could wipe away everything else. But this is what I mean by good loser. Not to mention, this person was on a roll, like I said, 80% win rate. But as we saw in the first example, you don't even need to have a win rate close to 80%. And as long as you're a good loser, then you can still have success. So hopefully you're seeing why, the indicator of are you a good loser? Are you minimizing? Are you keeping your losses small? Very, very important. And then finally for this one, this was a screenshot that just wouldn't work. So I just took the gains and losses. So let's go through these. $140 win. Awesome. $175 win. Awesome. $128 loss. Okay. $15 win. We'll count that as a loser too because of those commissions. $203 loser. $66 winner. $703 loser, but that's a little deceiving. If you skipped ahead, you'll see, you probably already realize what I mean by that. $86 loser. Now here we get to the, the good stuff. $575 winner. $517 winner. $5,063 winner. $1,886 winner. So while the $700 loser may seem a little, that doesn't belong. Well, this person is obviously using a bigger account, and they're going for bigger wins. So when you consider that they're willing to lose $700, when you start to see $5,000 winners and $1,800 winners, that risk versus reward for this person is still in place. So remember, it's not about the amount of the losses, it's about the amount relative to what you're willing to risk. Because that $700 loss compared to the first two, that's crazy. That's crazy. Well, it's all in perspective. And when you see this person pulling out $5,000 winners, $1,800 winners, okay, now the $1,700 makes more sense. So the amount of the loss matters, kind of. The amount of the loss in the overall context, that's the key thing, and that's the leading indicator. And then finally, to kind of illustrate what I mean by you don't want to be a superhero, click the button that shows up on the screen right now. This is a live trade of me trading and proving this point in terms of you don't need to be impressive as a trader. I get myself in a little bit of a hole, but little bit is the key word, and you'll see that by no means do I have to be a superhero to get myself out of the trade. In fact, it's a very, very boring trade that actually wipes away the loser, but that's what we want. We want to be good losers. You don't want to have to be a superhero. If you are finding yourself needing to be a superhero to get back to break even, or what have you, or even cut your loss a little bit, that's not good at all. So get out there, go through your records, and start to look back. Are you a good loser? What are the amount of your loss relative to the grand scheme and context of your portfolio and the amount of money you're using? So keep that in mind. And like I said, long term, that's the key. Sure, people, get winners every now and then, but if you're getting big winners and then you're giving it all back, red flag, not what you want. If there are any other questions, leave those in the comments below. Also, if you enjoyed this video, please click the like button. Little things like that go a long way. So thanks for watching. I'd encourage you to visit claytrader.com and take a look around. Always looking for new people in the community. Also, if you want a free resource guide of how I find the stocks that I trade, which is probably the most common question I get, down below you can click on a link and that'll take you to that free resource guide. So check that out. Thanks again for watching. Remember, get out there and trade without emotion.